Welcome to Infinity Capital, everyone. This is Raj. So today we are going to analyze Sandhar Technologies. So Sandhar Technologies is an auto ancillary company. So they make auto locks, aluminium die casting components, sheet metal components, cabins, assemblies, mirrors, and other things. So basically, locks contribute to 22% of their revenue, aluminium die casting 21%, metal components 12%, cabins 12%, right? So this is the percentage, revenue percentage breakup. Now let's look at the segment wise, which segment do they cater to. So two and three wheelers make up about 58% of the sales, four wheeler make up about 21%, OHV and tractors make 14% and others make 7%. So largely their revenue comes from, a big portion of their revenue comes from two wheelers and three wheelers. Two wheelers and three wheelers also happen to be low ticket items. So the demand revival in these low ticket items will be much sooner as compared to four wheelers. Four wheeler demand will not kick off so soon, right? So we have the lockdowns easing up right now, and with a good monsoon we can expect good rural income in the next 2 to 3 months. So probably in the next 2 quarters we would see good pickup in two-wheeler, three-wheeler demand. So which are the companies they are catering to? Royal Enfield, Suzuki, TVS, Honda, some of the biggest names in the industry, right? Now they have a portfolio concentration. So 51% of their total revenue comes from TVS Motors and Hero MotoCorp. So this is a good thing as well, because if you'll see, we'll go and check the TVS Motor sales and profits. So TVS Motor has seen good traction. If you see, as compared to last year, they've done 600 crores of profits. Their sales have increased. Okay, so TVS is doing pretty good, right? And let's look at Hero MotoCorp. If you look at Hero MotoCorp, see, they've done around 3000 crores of profits. Their sales have also increased marginally, not much, but marginally. So since Sandhar is catering to these two companies in a big way, we have seen that there is good traction in TVS Motors and Hero MotoCorp also. So that is going to be a plus for Sandhar as well, because 51% of their revenue comes from these two companies, right? Top 10 customers account for around 83% of the revenue. Now, noteworthy is that 85% of their revenue comes from the domestic market. So we were earlier focusing on companies which were export oriented. However, in the Indian market, two-wheelers and three-wheelers should pick up before four-wheeler sales. So, so ideally we should see some sort of traction in the next 2 quarters in this company as well, right? They have a technical collaboration with Honda Locks, so that helped in establishing itself in the single source supplier of lock set assemblies, right? So let's quickly do the shareholding pattern check. The promoters hold 70% stake. DIIs have good participation. Only 12% of the stock is out to be traded with public. So good participation by institutions. That's what I like to see. Cash flows, around 124 crores of cash flows from operations. So, so they've been continuously generating positive cash flow from operations, right? Let's look at the balance sheet. Around 300 crores of borrowings on 1600 crores of market cap. So it's pretty decent. Okay. It seems that they are doing some sort of, their gross block has increased by 40%. 50%, so they must be doing some sort of expansion, right? So once the expansion is over and the new facilities are operational at full capacities, we'll see sudden spurt in sales and profits as well, right? They have investments of around 58 crores. Cash on the books is around, so 11 crores and 11 crores, around 60-70 crores. So that amounts to roughly around 5-7% of the total market cap of the company. So that's also pretty good. right? From a profit and loss perspective, we'll see that there has been very marginal change in the sales, which is good considering the fact that we've had a very bad year last year. This year, first 3-4 months, we had severe lockdowns. In spite of that, we've seen good sales, right? They've managed to maintain their profit margins, which means they have some sort of pricing power over the products that they are selling. If you see, their profit margins have been stable and becoming better. Any company whose profit margins are stable has pricing power, and the companies which will do better going forward are only the companies which have better pricing power, companies which have less debt, which have good market share, good sort of products, right? So this gives us a definite understanding that they have pricing power on their product, right? So they've done around 58 crores of profits, pretty much the same as last year. Yes, it has dipped as compared to 2019. However, if we compare for the past 5-6 years, they are still doing pretty decent. Okay, so let's look at the quarter numbers. Quarter on quarter, the numbers were very good. Last quarter they had posted losses. Sorry, last quarter they were doing net profit of 12 crores. This quarter they are doing profit of 40 crores. So pretty good, right? Now we will have June quarter numbers coming pretty soon. So last June they posted losses. So if we have a profit quarter, we can see substantial amount of traction in the stock moving forward, right? Let's do a PE analysis. So the median PE is around 26. The stock is trading at a PE of around 27. So it's decently valued in my opinion right now. Let's do a technical analysis check. So what do we have here? Stock got listed in 2018 and it got sold, went down by 67% or so. Now the stock is basically consolidating. This is the area of consolidation. Right. Now, what do we have here? Amongst all the auto ancillaries, this is not the highest quality stock, but we are seeing some sort of traction here. If you see, volume is picking up. See, the stock is trying to break out on very heavy volume, so that is a good sign, right? So how do we enter this stock? So what do we have here? On the left hand side, if we see now the 200-day moving average has started going sideways, which is a good sign, right? The stock has been trading above the 50-day moving average for quite some time now. 50-day moving average has turned upwards. So overall the scenario looks pretty good over here. And how are we going to play this? So we are going to basically start buying within this range, within 240 and 267, 245 and 267. This is the range in which we will be accumulating this stock. I will be looking to accumulate this stock within this range. Okay, and we'll be keeping this stock for the next 2 quarters. It's very difficult to anticipate a stock's movement in the next 10-15 days, and we don't play the 10-15 day game. So I usually like to pick stocks with specific niche advantages. If they must be they must have either good margins in the business, or they have some sort of advantage in the business. So I continuously keep looking for those kind of stocks, right? So Sandhar, as we have seen that that they have good margins, they don't have much debt, their sales are good, their profits are also good. So overall it's decently poised as compared to the other peers in the market, right? So start accumulating. We're going to start accumulating in this segment. What sort of upside can we expect in this stock? So this is the previous point. If you see, this is the range in which the stock has traded for roughly a year. The stock was trading in this range for roughly a year, and then the stock broke down. So there are a lot of people who are stuck here. We can take a calculated bet. Since the stock was trading in this range, People must have bought the stock, and then the stock suddenly broke down. The stock suddenly went from 250, 260 to 128. So these people are feeling the pain. There are people stuck in this zone, and this zone will act as a resistance. In the sense, supply will come in. Whenever the stock tries to go up, it will face selling pressure. So if you'll see, stock went up and then it went down. It went up again and then it went down again. So it's trying to go up again and it's getting sold off, right? So the moment the supply from this area sort of gets absorbed, we'll see a good up move in this stock. So the ideal range should be around 240, 250, 260. So 250, we can safely say that we can accumulate the stock around 260. And the first target should be at, at least 380, 390, or between 380 and 400 levels. That should be the first target. Why am I looking at these levels? Because see, the stock got listed here. The IPO came over here. This is the zone in which all trading has happened, post which the stock has just broken down. So there are a lot of people who are stuck at these prices, and the moment the stock comes into this zone, we'll start seeing supply, we'll start seeing selling pressure, because these people who are stuck in this stock since 2018 are feeling the pain. And the moment the stock is going to come in the zone, we'll see some sort of supply coming in. So, we start buying here, we offload something over here, 1/3, half, however you want to play it, right? So this is the analysis, guys. Quick disclaimer, this video is for educational purposes only. This is not a buy sell recommendation. Thanks a lot for watching, everyone.